introduction about what this session is going to be about before introducing our panelists for the day. So we launched PowerUp Money in March 2025. So this exactly marks a year for us. And what a journey it has been. So many of you have become PowerUp users over this period. We have built and rebuilt ourselves basis your inputs, encouragement, and feedback. And we feel truly honored with the responsibility that you have placed in us. And we do not take that responsibility lightly, which is why we're even doing this call so that we can share everything with you transparently. I was, in fact, reflecting that we started doing these webinars in September just so we could build a relationship with our investors, so we can tell them what we are thinking and we could hear what you are thinking. And I cannot say this enough but it is a privilege to be building PowerUp Money for all of you. And the mission that we have undertaken, that unbiased, transparent, high quality mutual fund advice should be in the hands of every Indian. So we will first take you through a presentation that we have prepared for you, which is our year in review, everything laid out transparently for you. Our methodologies, our products, our wins, our losses, what we have planned next, and so much more. And as investors who use PowerUp and have placed their trust in us, please stick around. We promise that this will be worth your time. And once we are through with the presentation, also, there will be a Q&A session in the end where we will answer all your questions. There is no time limit. As many questions as you have, please keep asking and we will keep answering them. Just please be patient with us while we take you through the presentation. I assure you a lot of what you might be thinking will already be covered in the presentation. So please listen carefully. And then, of course, if you still have any questions, if you would like us to cover something again and again and again until you feel satisfied and happy with it, we will keep taking up those questions and answering them for you. So that is all. And again, welcome to PowerUp Money's first annual investors call for the financial year of 2025 to 2026. And now, without further ado, I'll just quickly introduce everyone who has joined this session from PowerUp Money today. I'll actually start from myself and maybe introduce Prateek in the end. So I lead marketing and content at PowerUp Money. And I'm Anvi. And next, I'll just introduce Arush Kapoor, who's the head of product at PowerUp Money.
Hello, everyone. A very good morning.
So Arush and his team are the reason that in a very short span of time you've seen so many products go live on the app, and the app has become so feature rich basis your inputs. But the people who execute it is of course Arush and team. So he's the man behind all of that. And then we have Mridul Mimansa who heads our investment team.
Hello everyone. Good morning. Very excited to be here.
Mridul is actually joining us for the first time, but we thought that, of course, for a session like this, we must have Mridul around because his team and him are the people who closely monitor every fund all the time so that they can be in the know of whenever anything changes or anything needs to shift on the app. They can quickly update the rating on the app on a monthly basis so that you can take the right decisions always. So, of course, I think one of the biggest responsibilities held by anyone at PowerUp is by Mridul and his team. And lastly, of course, the man who runs the show, Prateek Jindal, who's the CEO and founder of PowerUp Money.
Hi. Thank you, Anvi, for introducing me.
Yeah, I think you didn't need any introduction, but of course, I went ahead. But that's all, everyone. Thank you so much for joining us. We are extremely, extremely energized to do this with you today. And we have prepared this presentation where we have laid out everything transparently for you. Anything that we've done right, anything that we've gotten wrong, also, we will share it all with you because you deserve to know in full honesty what we have been up to in the last 1 year and what we plan on doing for years to come for you. So yes, Prateek, over to you.
All right. Thank you so much, Anvi. While I'm presenting my screen, I just want to share a bit about Mridul. Mridul is joining us for the first time today because he and his team of, about 10 people that we have in our investment research team are the people behind, all the ratings, rankings that you see on our platform, bringing in a very comprehensive quantitative edge to everything that we do. We have built frameworks, all thanks to Mridul, that allows us to keep track of every fund on a monthly basis so that, we can give you the best rating. So thanks, Mridul, for joining us. Finally, we could convince you to be here.
I'm very excited to be here, Pratik, and to be interacting with everyone. And I thank everyone for the trust also that they have shown on us.
Great. All right. So I am both excited and a bit nervous. Um, while we have probably been around and doing these webinars almost alternate weekend since September, maybe this is our 20th, maybe this is our 25th. I've lost count. But this one is truly special. And this one is truly special. It's been an year since we launched PowerUp, and what an year it has been. Uh, we have now 8 lakh plus investors who are using PowerUp with a total wealth of upwards of 1.3 lakh crores. We have now 56K plus elite members tracking their wealth of about 25,000 crores. And our newest product, Infinite, which launched just in January, has already crossed 100 plus Infinite members with an EM of 150 plus crores. Could not have hoped, could not have wished for a better start for this purpose that we have set out to solve, the problem that we have set out to solve. Uh, Thank you so much, first of all, for trusting us with something as important as your wealth. We don't take this lightly, and uh, our we don't take this lightly, and always wants to make sure that the recommendations that we make to you are always and always in your best interest. We started PowerUp a year back because we realized that access to unbiased, high quality investment advisory does not exist in India. With almost 61 million of us, 61 million Indians doing mutual funds, there is no one that you can trust. There is so much noise, but there is not enough out there that you can trust. So we took a license from SEBI. It's called an RIA license. We have a SEBI registered RIA. As part of this license, we don't make any commissions. Most of the investment advisory in India is done via regular mutual funds, wherein there is an inherent commission involved that can make those investment advisory biased. We are a SEBI registered RIA. We don't make any money through commissions. The license does not allow us to. Please remember that we only make money when our elite members or infinite members pay us a fee. So that inherently means that the only incentive that we have is to make a meaningful impact in your long-term wealth creation. Only if we are going to be able to do that, will will this family of 8 lakh customers and 56,000 elites become 20 million customers and 2 million elites, right? That's the only way. So given 900 of you have already joined, this is almost our biggest gathering so far. I would quickly like to first run a poll before I take you through how this year has been. And are you going to help us with the poll? So please let us know. All of you have joined. Take a second to let us know how is your engagement with PowerUp. Are you an elite member or an infinite member? Are you planning to get one, or do you just love the free product? The three options here. And I can't see the results. I need to be made a co-host, I think.
I'll do that. Can you see it now?
It's gone now, maybe because it happened in between.
I'll just let you know the results.
All right. So usually I can see the results when we run a poll, but I can't.
So 87% are an elite or an infinite member.
Fantastic.
9% are planning to become an elite or infinite member, and 4% are happy with the free product.
Wow. It's so good to be to have, wow, I love this result. It's so good to have 505 of you who are already elite or infinite member, and most of you considering it. So thank you so much for taking out this time, first of all. So moving on, I've spoken about this before, but to make this unbiased, high quality advisory accessible, there is a lot that goes behind. And the first part of this is quantitative performance and the quantitative edge that Mridul and Dream bring to the table, wherein we evaluate each and every fund based on 20 years of data. And this is past performance of any funds. So whenever a fund is launched, since its inception, we evaluate each and every fund against the other funds in that same category. So the performance of any fund, the best way to identify performance of any fund is not based on absolute returns it gives. It is based on, in that category, how is it doing relative to the peers. Sometimes market is going to be high, sometimes market is going to be low. Sometimes a category like small cap will give you 30% return, sometimes it will give you 10% returns. The right way to measure performance of any fund is to see how has your fund performed vis-a-vis the other funds in that category. And this is where the quantitative leg of our fund evaluation performance ratings is we analyze each and every fund on the long-term performance of the fund relative to its peers. We look at the downside protection of every fund, which means that when the market falls by, let's say, 2%, does this fund falls by 2%, 1%, or 7%? The great funds would not fall as much as the market. That's the beauty of measuring or evaluating a fund on downside protection or volatility. Now, recent performance is also very important, right? We cannot just rely on the long-term performance of a fund. If the fund has not been doing well over the last 6 months, 12 months, then also it is important to make sure whether the strategy of the fund is right, whether the leadership of the fund management is right, so that we can fairly predict whether this is going to bounce back soon enough or not. So this is on the quantitative side, and we marry this with experts validation, with qualitative judgment of every fund, wherein we look at the fund manager track record. We in fact even have one-on-one discussions with fund managers today. We track everything that they speak in public forums so that we can understand their strategies better. We look at the fund composition and portfolios, what kind of sectors they are invested in, how often are they churning their portfolio. When there are some meaningful shifts in the portfolio, then how are what's the thought process behind it? And we also look at every AMC level, which is the fund house level, what is fund house strategy and overall performance, and the leadership and the management that is running it. So when we bring all this together, is when we are able to rate and rank any fund. It's the sole objective of doing such comprehensive fund evaluation is so that we can give you a framework, we can make a recommendation that is going to add meaningful value to your wealth creation. Now, anything that we anything that we recommend also goes through thorough back testing before we release any rating. Now, back testing means that if we had rated this fund in 2021, how did this fund perform over the next year, or over the next 2 years, or over the next 3 years? So this is back-tested data on which we built this model. And the back-tested data results will show you across categories that the recommended funds help you make about 3% or upwards better returns as compared to the category average. If I take an example of FlexiCap, This is our back-tested data. A FlexiCap informed fund that we recommended has about 5.3% alpha over the category average on 1 year basis and 3% over 3 year basis. At the same time, at out-of-firm fund, if you are holding an out-of-firm fund, then for that fund, on 1 year basis, that fund performed minus 6.4% on vis-a-vis the category average, and on 3 year basis, minus 2%. So if you see the difference, on 1 year basis, the difference between an underperforming fund versus an informed fund could be 8%, on 3 year basis could be 5%. This is quite meaningful. This is exactly where we want to head. Now, well, this is back-tested data, and it looks great, right? 3% alpha is always considered, one of the best in the market. But did we actually deliver this? We built this model based on past data. We have back-tested results, but did we really deliver this since we started operations? And this is where we created our own report card, like we say it internally. And what I'm going to be sharing next is the actual performance of our recommendations, not back-tested data. It is the actual performance of our recommended funds over the last 1 year. And with this year in review, we also, make a new commitment to all our investors that going forward, this is what you should expect from us, to be completely transparent in showing that the recommendations that we made, how did they perform. So to best evaluate the performance of the real performance, the actual performance of the recommendations, we defined 3 metrics. The first metric is, what is the probability of beating the category average? As I explained, the only way to evaluate a fund's performance is vis-a-vis the other funds in that category. So how many times did this fund beat the category average? Because that is a great indication of consistency of that fund. And that's why we kept it first. The second one is, by how much did it beat, which is very commonly known as alpha. The third thing, and this is very important as well, that if we have marked a fund informed, then for how long does that fund remain informed? Because investors don't want to churn their portfolio, which is also very right. So our recommendation should not only be chasing alpha, but our recommendation should also be consistent so that the churn on the portfolio can be minimized as much. So we defined these 3 metrics, and we categorized, and this is just for simplicity of data. Now what I'm going to show you is that how was our performance across these 4 different groups of mutual fund categories. High risk will have small cap, mid cap, multi cap, mid risk. Medium risk will have ELSS, flexi cap, focus, large and mid cap, value contra. Low risk will have large cap, and the remaining funds will be hybrid. These are categories wherein 90% of invested value, 1.3 lakh crores of investments that we see on our platform, 90% of the investments are in these 3 plus 5, 8, 9, 9 plus 12 categories. So over the next few slides, I'm going to talk about how our actual performance of our recommendations was on these categories. Starting with high risk category. In high risk group, which is small cap, mid cap, and multi cap, 86% of our investors that we have on our platform, 8 lakh, 86% of investors have invested in this category. It is perhaps the most important, most biggest category, set of categories where investments are made. Now, if you're going to look at the performance. Now, look here, that the average alpha that our recommendations created in this 1 year, and I'm talking about from 1st April to 30th March, that's the period that I'm talking about, is 3.44% over and above category average. The probability of beating category average was these funds had 12 months of performance, and in that 12 months, 90% of the time, these funds performed better than the category average. Of course, this is the long-term performance. If you see over a long-term period, the same funds have given an alpha of about 7% over category average with a probability of 94%. Um, so this is how our high risk group performance hold. And the last metric that I said is the recommendations that we have made. Since how long have they been in firm fund? The average number is 21 months. And please note, these funds are still in firm. So this average number is only going to increase. We think that a recommendation made most likely is going to hold good for 2 to 3 years at least. Great funds will have an average stay time of 5 to 6 years, but especially in a high risk cat group, which is small cap, mid cap, and multi cap, having a 21 months stay time and continuing that is actually we think pretty good. Now there were certain learnings as well in this category, and one of the biggest ones was in mid cap category. You see, in mid cap category, we have recommended just 4 funds as the top 3 ranked funds, in the entire mid cap category in the entire year. The fourth fund, which is not there in the top 4, is actually Motilal Mid Cap, on which we took a call in March to drop it from inform to off track after doing a thorough analysis. And in fact, next week sometime, we are also going to be releasing a special edition of both Elite Lens and a video wherein we will take you through our one-on-one discussion with Motilal management team on their thoughts on this fund. Anvi can speak a lot more about it, but we've just done this last week, wherein we spoke to their CBO to understand their perspective on this fund and the reasons behind sudden drop in performance. No one could have guessed it. No one could have guessed it. Motilal Medcap was one of the best funds in its category. For 48 months, it gave stellar returns, and after that, it was sudden shock. So, but yes, we call that as something we could have done better. I don't know how, but that's definitely something. And the other thing that is also important is multi-cap. I can see that we ended up recommending 6 funds in top 3, which is not good, right? And 4 or 5 is where we think would be better in a year. 3 will be minimum because there are top 3 funds, but 4 is great. 5 is good. 6 we think is not good, and that was one of the line. Now, even at a fund level, this was at a category level, even at a fund level, if you see, these are all the funds that have been recommended in mid cap. I already said we got 3 out of 4 right. In multi cap, we got 4 out of 6 right. This is somewhere we think we can improve. In small cap, we got 4 out of 4 right. You look at small cap recommendations, you look at their average alphas, right? Amazing. You look at the probability of beating benchmark, amazing. So the funds that we recommended month on month for the last 12 months actually were among the best in that category and continue to be. Now, moving to the medium risk group, which is where ELSS, FlexiCap, Focus, large and mid cap, and value and contra funds come. This is also a very big group of categories. 84% of the investors that we have on our platform invest in this category. And here also you will see that on an alpha basis, our recommendations fared or delivered 3.5% over the category average, over and above the category average. The probability of beating category average was actually even better here. It is 85%. We target 80%. That's the target that we have set for ourselves, which is itself one of the best number that one should target. Typically, industry, the most senior advisors, investment advisors would also say that, we'll be able to get our investments recommendations right 70 to 80% of the time. We have chosen to keep that number at 80%. So in this group, across categories, 85% is actually quite a good number. A number of funds were five in each, and like I said, four is great, four is great, five is good. So we were in good range. And of course, over a long term, if you see, these funds that we have recommended have been informed for the last 30 months. This is exactly what I was saying. High risk, previously I spoke about high risk, which is where there is small cap, mid cap. They are more volatile. There are more ups and downs in those categories. But unlike in medium risk, these are more stable funds. And here, that is why you are seeing that the informed stay time, the funds that have been recommended have been informed for the last 30 months, and they continue to be, which is a clear signal, demonstration of that the churn is not going to be too high. There were areas that we identified wherein we could have done better in focus and value and contra. Probability of beating benchmark is around 75%, which is where we think we can do better and take this to 80%. Having said that, like I said, 70 to 80% is a good number, but the benchmarks, the goals that we have set for ourselves is 80%. Now, at a fund level, if you see in ELSS, we got 4 out of 5 right. In Flexica, we got 5 out of 5 right. It's a beautiful. This is perhaps the most biggest category within this group, Flexicap, and you can see here that the probability of beating category average across funds was very healthy. The alphas were also very healthy. In focus funds is where we identified two funds wherein the performance that we recommended were not up to the mark, and this is an area wherein we would use these learnings to improve this over the next year. And large and mid cap and value control, so we got 4 out of 5 funds right. So in this group also, at an overall level, we got 80% of the fund recommendations also right. So in the previous slide, I was talking about the probability. This is at a category level, it's 85%. But even if you look at the fund level, we got it. Our recommendations were 80%. Now, low risk group we defined. This is where large cap category comes in, and 52% of the 8 lakh investors that we have invest in large cap funds. And please understand, a lot of you also invest in index funds. So many more of you must be investing in index funds instead of active funds. This number 52% is for large cap active funds, and really good picks we could make in large cap. It is a tough group. In large cap, picking a fund that can actually deliver alpha over index is actually the real test of quality of the investment advisor, because if you don't generate alpha in a large cap category, then it is rather better to invest in index fund. So here, I feel extremely happy that the funds that we picked have actually delivered alpha 100% of the times. The probability of beating benchmark month on month is extremely good. And the funds that we have recommended have actually been, you look at this, right? I mean, White Oak is actually a new fund. That is why its informed stay time is 10 months. But otherwise, ICICI Pru and Nippon Large Cap, these are the funds that have been informed for the last 4 years. And they continue to be one of the top recommended funds and beating the benchmark and delivering alpha for the investors over the index. So very good, very satisfactory performance on this group. Coming to the last group, which is hybrid, and 37% of the investors, this is the most not the most popular, but still a very important group as you look at your asset allocation. In fact, as we release power allocation, there is going to be an exposure to hybrid for most of the risk profiles that we will be recommending. Not all investors today are investing in hybrid funds, but most should, so that they can build the right mix of portfolio, which can also perform well, which can give their portfolios a good downside protection. Now, in hybrid categories, there are four categories: aggressive allocation, dynamic, multi-asset, and that's it. Sorry, aggressive, dynamic, and multi-asset, the three categories. All the three categories have equal participation from the users. Now, in this two categories, we did fairly well, which is dynamic asset allocation and multi-asset allocation. Aggressive allocation was one of the weakest categories for us in this year. The probability of beating benchmark as well as alpha over the category average over the last 12 months has not been up to the mark. Having said that, on a long-term basis, on our back-tested results, this category has done very well, and we think it will bounce back and continue to do well for investors. But in this category, our results were not up to the mark for sure. Even at a fund level, you will see that in aggressive allocation, we got only 3 out of 5 fund recommendations right, and two recommendations that we made actually pulled our performance down. In dynamic asset and multi-asset, things were as per our expectations, wherein we could deliver 80% plus above probability of beating and a decent alpha for this category. Now, this brings me to the end of the report card. See, overall, we did deliver on the benchmark that we have set for ourselves. We got 80% of the recommendations right, and I just feel that this is just the beginning. When we built this report card, we had so many learnings that we feel we can do far better than this. So that we feel that we can do far better than this, and this report card has helped us define variables, define metrics on which we can continuously evaluate our performance. It's a report card for the problem that we're solving. It's the report card that helps us understand the responsibility that we have taken. Are we delivering or that or not? And as I said before, we are going to continue doing this. We're going to continue sharing the results of our recommendations transparently, because this is what every investor who trusts in us should have access to this. We won't get every recommendation right. No one can. But we will continue to make sure that we are raising the bar year on year, and we are helping you make the right decisions for your investments. Even if we get a call right, we will not shy away from coming back and telling you that, hey, this was wrong. We want you to change this. But so the assurance that we stand for is that we as a team will always be available, is always evaluating each and every fund and helping you with timely recommendations so that you can make better decisions for your portfolio. You can make better wealth, long-term wealth over a period of time by following these recommendations. And I can assure you that they will always be unbiased and in the best of your interest. Now, this may be very heavy for some of you, too many numbers. I tried to simplify it as much as I can, but I'm sure it was still heavy. So if anyone has any specific query around the year in review, please write to me. I would be more than happy to reply to everyone if there is an understanding gap, or if there is a question. If someone has any suggestion in terms of if there is something else that we should look at, more than happy to share those numbers one on one. For a larger forum, these metrics made the most sense. If there is someone who's looking for something specific, then we will be more than happy to help there as well. Okay, now I'll come to one of the biggest questions, and I've got Mridul to answer that today. That we spoke about the funds that we rate and the rank, and how the performance has been. But why don't we have all the funds on the app rated? Why do I still see unrated funds on the app? So this time I'm not going to make any promises. I'm going to conveniently let Mridul only speak about where do we stand and what is the status on your unrated funds.
Thank you, Prateek. Yeah, so as we stand currently, as you can see, we currently cover around 90 odd percent of the AUM, and that has been rated on our app. When we began, we started off with the equity categories. Then we expanded to equity index, and then we launched ratings and rankings for hybrid. And all of this happened before October 24. Over the last 4 months, we've specifically focused on a few niche categories. Gold, silver, it was something that we launched in December. We also launched children funds, the ratings for that in January 26. And lastly, in the month of March, we've launched our global funds ratings. Now, what are we planning for in over the next couple of months or the next 3 months? Something that we've received a lot of requests for is the ratings and rankings for the debt category. And as I just mentioned, we've unlocked equity, we've unlocked hybrid, we've unlocked global, we've unlocked metals. The one asset class, the one critical asset class that is currently remaining, and that is something we're focusing on over the next couple of months, is going to be debt. So this we'll be launching in 2 phases. Six subcategories we've picked for launching in the month of April 2026. This will include subcategories like liquid, money market, and short duration. We'll also be launching a few key Indian sectoral categories, the ratings and rankings for that. I just saw a couple of messages in the beginning of this webinar regarding when are we going to be rating PSU funds. So that I can assure you is going to be launched in the month of April 26, along with some other categories like manufacturing and MNC. The next month, we would be looking at completing our coverage for all debt funds, and that will include 11 subcategories, including banking, PSU, floating rate, and overnight. Lastly, by June, the remaining Indian sectorals, these are very niche in nature, and hence we are taking a little more time to ensure that we get our models right, we get our recommendations right, and that is planned to be done by June 26. As you can see, by June 26, our aim is to have a coverage of around 98 to 99% of all user schemes and all user AUMs that we'll be rating.
So thank you, Mridul. Mridul always gives me a very over-ambitious target. So he made the table and I made the slide. So in the table, he's actually making a commitment that by June, 98% of the AUM will be covered. But you can read that, as I should be, as the CEO, making sure that the promises that we make, we are able to deliver. I have very smartly changed that 3 months to 6 months here. But jokes apart, we will try our best to deliver on the commitments that we are making on this. We know most of you are looking forward to this, and we will try and make sure as much as possible that in April, May, and June, our coverage is near 100%. Now, please remember that yes, there are certain categories that we have not rated, especially debt and global we just released. But within a category, it's very important. The first point that I have written here, that within a category, we do not rate a fund which has been launched over the last 2.5 years. So there is a fund that was launched 12 months back in a small cap category or a flexi cap category. We will not be rating it. Our ratings and rankings framework and methodology requires a thorough backtesting and quantitative past performance of at least 2.5 years if it is an active fund. And if it is an index fund, then also we need it for 6 months. So those we call them unrated. Those are not really unrated. Those are new. In fact, on the app also, we want to start categorizing them, calling them new funds rather than unrated funds. Something that we have been wanting to do but not able to prioritize it. So these funds will still not be rated. 2.5 years old fund will only be rated if it is an active fund in a category. And for passive also, we would need 6 months to rate a fund. The last thing that I must also say is that if there is a sector, and Mridul spoke about how we are going to cover all the sectoral, but if it is a new sector, it's a new category of fund, like there is a fund called Momentum 150 something something, right? Why? And some of our investors have invested it. Now in that category, uh, that's the only fund. See, we can rate a fund performance based on peers. So we need peers. If a class has two students, does not make sense to call one and first, well, one student first and second student second, right? So in a category, we need at least five funds today to be able to rate a fund so that we can actually see how the performance difference has been. Now, we may push ourselves to see if we can do this in a category which has four funds. But today, if you have any subcategory, any category, any sectoral, any category that has less than five funds, we cannot rate that because that would not fit into the framework. Okay, now I'll come to the next two sections before I'm going to ask Arush to share our next 12-month plan. So this is a small reminder on PowerUp Elite. When we started PowerUp Elite, when we launched Elite in May, all that we had was selection, which is power ranks. And by the way, the entire performance record, the entire year in review, the real performance that I spoke of, you can unlock that by power rank. In any fund, if you want to know what are the top three, then power ranks will help you. Most of you are using it today. In fact, I've seen some very interesting data how for our elite members, their investments in top three ranked funds have increased drastically. It feels so exciting. At the same time, I feel so I'm not able to get
The
the word. I'm
weight
not
of
able.
the responsibility. Yes.
Yes, that the recommendations that we are making are being followed by our elite members so religiously. Uh, this is how we had launched it, and of course, you got access to it first when we started Elite. When we launched Elite in May, the next big thing that we launched was in August, which was rebalancing. The next thing that we launched, I think, in December, was, I think we missed writing Power Select here, but after August, I think in October, November is when we launched Power Select. And then another month later, we launched family portfolios so that our members can actually have a single view from their app. They can manage all their family portfolios. Then we launched regular to direct plans. Then we launched tax planning in March, just in time. I think around March 10th is when released it. So many of elite members actually could harvest, could do tax harvesting using those plans. I myself did. I think I saved about 70,000 in taxes by using those plans. And the last thing that is remaining in elite is power allocation. I know we have been promising this since since October, I think that it will come. I think the first commitment that we made was January, and then that became March, and now it's become May. I totally acknowledge this. We set ourselves for ambitious targets, and the work on this product has actually been going for 6 months. And we just want to make sure that when we bring this to you, it is in extremely good shape, the way we want it to be, because recommending the right asset allocation to every individual has to be done right, and we have to create the system so that the experience, so that the recommendations that are made to every individual are as if you were talking to someone. So it is by far the most complex product to build, and that is why it has taken us time. We are currently at a point that most of the work that we are doing is around power allocation. And as Arush has been promising me, he's again promised me that by May we will launch this. If we don't, then please don't catch hold of me, catch hold of him. But this time, we are very close to the finishing line. And this is when power allocation is going to go live. Um, One thing, through this journey that I want to say is that this is how you should expect. You should have your expectations from PowerUp as well. Every couple of months, will build something that you need, that can help you make better decisions for your wealth. Whether it is on fund performance side, whether it is on asset allocation side, whether it is on taxation side, whether it is on just on convenience side. That's exactly what we aspire to do, to not only give you access to extremely high quality investment advisory, but also make your investing experience very, very seamless. So through this 1 year, this is where we have reached. Um, it's a reminder that we launched Elite at 999. After allocation, this Elite, this entire Elite subscription membership is going to be increased to 1999. Only then will it make sense for us. So we always said that once Elite membership is complete, only then we're going to do this, because in this year we have taken time to complete this. So that's something that we want to call out transparently. The second thing that I am, recently been very excited about is our new product, which is PowerUp Infinite. A lot of customers reached out to us saying that we love Elite, but I still want someone I can speak with. I want one-on-one planning, one-on-one advisory, because there are certain more nuances that we want them to cover. So we need much more personalized portfolio management. We want to customize the recommendations that we get. We want to discuss them. The second big thing that we realize, that investors who are in the mid to late stage of their wealth creation, is they want to now start planning for all their goals, whether it is buying a house, whether it is planning their kids' education or their wedding, whether it is planning their own retirement. The other thing is, when your wealth increases beyond a point, then capital gains, tax harvesting becomes even more complex. So to bring everything together, coupled with a, a complete hand-holding and ownership of execution. See, one of the biggest reasons why retail investors lose out on making better returns is the delay that they end up the delay in decision making. If I've got a rebalancing plan as a retail investor, I may think that maybe this fund will bounce back. So I may not want to actually execute on this plan and wait for some time. When the markets are down, then we know that it's the right time to invest. But then I'm just waiting that, what if they go down more? So shall I just wait for 2, 3 more days or 2, 3 more weeks? But markets don't listen to anyone. One day they'll fall by 3%, the next day they'll be up by 4%, right? So this the cost of delay in decision making is actually what leads to a lot of delta on the table. And this is what Infinite also brings to the table. Our team, Infinite team, only manages your portfolio, including end-to-end execution. So they decide, of course, with your consent, that today is the right day, and we should make some new buys, and they'll execute it. So even if you're busy, this will happen. So this is what we built in Infinite. Infinite is invite only. If you want to get access to Infinite, you can write to us, and we will share email IDs. Our capacity to handle Infinite customers is also limited. So that's why we are running a wait list. We have an ongoing wait list of about 800 customers. Some of them we have already reached out to. Launched in January, we have now about 100. We have onboarded about 100 plus customers. We are able to onboard about 5 to 10 customers every week. So every week we reach out to customers, whoever is interested. We give this invite. Now, this is the first time that we're doing this poll, and these polls also help us capture insights into what is important. So I'm going to request Anvi to publish this poll, which is around Infinite. 80% of the customers that have come today for this annual investor call are elite customers. And this poll will help us validate how important is Infinite for you. And I'm very pleased to see the results, which is what we are going to publish very soon. Almost 40% plus. The number is now 42%. Almost, please vote whoever has not yet voted. It just helps us understand the need for Infinite product. And this is exactly what we had also assessed, that almost 50% of the customers, and especially customers who are now, like it's in the mid stage or the late stage of their wealth creation, who already crossed 50 lakhs. For some, this happens when they cross 75 lakhs. Especially for those customers planning their goals, having someone who can own this, having customized strategies becomes very important. And this is where Infinite comes in. Thank you so much for this poll. This validates why this product is so important, and you're going to see a lot more on Infinite in our next fiscal. One of the most important things that our platform does not offer today is buying and selling of direct mutual funds from PowerUp Money app itself. Today, you started building your portfolio on one app, and then you may have, tried out another app, but you are using our app. You're using the PowerUp app for your recommendations, but you cannot execute on those recommendations from PowerUp app. So we have been building this buy sell platform on PowerUp for the last 6 months. We are building it in the most comprehensive manner. That does not mean when we launch, we will have everything. But all of you have been doing mutual funds for the last 7 years, right? So the platform that we create needs to have all the experiences right, all the stability right. So this product, while it's ready, we have not rolled it out to everyone. We have just rolled it out to about 600, 700 customers, and we are testing different flows. And very soon, we will make this available to everyone, so that you can buy and sell your mutual funds from PowerUp Money itself. This is going to be a direct only platform, only direct mutual funds. We will not do regular mutual funds. The reason is very clear. I'm sure you know about this. Just a reminder, the difference between a regular and direct mutual fund is actually an expense ratio. In a regular fund, you end up paying about 1 to 1.1% extra expense ratio. And that expense ratio is actually almost equivalent to that expense ratio is the commission that is made by the intermediary that is offering you the regular fund. So if you are a do-it-yourself investor, if you've been investing yourself and if you're investing in regular mutual funds, there is no reason. It is important for us to talk about it because 55% of the 8 lakh investors that we see on our platform still hold a regular fund. In our previous workshops, we have also done multiple polls wherein we have assessed that most of these customers, most of it, almost 80 to 90% of these 55% investors do not have a high quality investment advisor who's actually advising them. That's why they are doing regular funds. So they are doing regular funds without knowing it. And that's where you're just losing about 1% in higher expense ratio, which is what you can avoid. Most of you are anyways elite members. Use your regular to direct plan to make that decision. Very soon you will be able to move them from regular to direct on the PowerUp Money app itself, which means you will be able to buy once you sell your regular funds. Then you'll be able to buy those funds from on the PowerUp Money itself. If any one of you wants to be a part of this, wants to get early access to our buy sell platform, you can write to us. For Infinite, if you want to be added to the beta list, you can write to us. So many of you have shown interest to be part of Infinite beta because you're looking for that product. Similarly, if you want early access to the buy sell mutual fund platform, write to us. We will add you. We will give you access. Please remember the platform is still new. We don't think it's ready for scale. Maybe in a month or two it will be. We'll keep you posted, but we'll give you access. Okay, that brings us to the last section, which is where we are going to talk about how the next year should look like. What are the things that we are going to build? And I'm going to request Arush to take you through our plan for the next fiscal in detail. Over to you, Arush.
Thank you so much, Pratik. So before we get into what we are building, where we are heading, and what are the problems that we are going to solve, I just want to take a step back and talk firstly about our product culture at PowerUp, or essentially how do we think about building products here at PowerUp? Because everything I'm going to explain is rooted into this culture, is rooted into this philosophy. There are three primary things that we focus broadly on. First is trust. Second, transparency in communicating as well as building products. And third is we build with user feedback. We build along elite members and we hear and take every possible feedback from our elite member community. I'll talk about each of these one by one and explain you why it is so important and why is it a part of our core product philosophy. First is trust, and we say internally that trust is over everything. Whenever we take or we think about decision making, we don't just say that we want to ship features fast or we want to just push the product out there. Whenever we are discussing anything internally, there's a one question that we ask always to ourselves, that the decision that we are taking, is it going to solve an investor problem or not, or is the decision in favor of investor or not? So one way to look at trust is that it is more easy when the markets are going up and when things are very simple and easy, but trust is made in bull markets. And a lot has been spoken about the uncomfortable decision we took on Motilal Oswal Media. Right, market was falling, funds were underperforming, and taking decisions at that point was very hard for us. We moved it from inform to off track, and we knew that it would raise questions over credibility about our ratings and everything. But we knew that answering this in the right format, explaining why we did it and why is it better for our investors, would help us gain trust over our elite members. And that's what we did. Trust also shows in the way we build products, right? We try to over explain everything and we do not ask you to take unnecessary actions. 80% of you are elite members, so I'm sure that majority of you would have acted or at least checked out a rebalancing plan. You will know that if your fund is good, if your fund is doing great, we never recommend you to make a switch. If your fund has high taxes, we tell you that it has high taxation. Even if the fund is bad, we ask you to wait because that is not in the best interest of the investor. Or if we are not seeing a good trend around the fund, we don't just ask you to make actions on it. And that is how we define trust here. There are no hidden incentives. We don't favor any AMCs. Our entire advice is unbiased. We ask you to put your money into direct funds, and everything comes out of the great philosophy we have. We are a SEBI registered RIA, which means that we are bound to work only in the best interest of our investors. And that's what we do every day with each and every product or feature release that we do. Second is transparency. And like I said, transparency is not only in the product that you are explaining everything, it's also about how we communicate back to our community. And I'll be very honest with you, right? Over the past 6 to 8 months, as we started scaling, our platform saw a lot of outages. There were some days when the values which were updating in our app were delayed, or in certain situations it was even incorrect, right? A lot of you wrote to us saying that hey, in this part of rebalancing the experience can be better, or in select you could add these two metrics to make it much more richer. And we acknowledge each and everything because that's how we think about product building. And the core philosophy we have internally is that if the investor is not satisfied with it, and we feel that it will make impact to majority of our investors, we proactively prioritize it, and we continuously work to fix it or enhance it. You will also see that the transparency is also deeply rooted in the way we are shipping products out there. I'll again talk about rebalancing. As a part of rebalancing, we always explain you the whys and the hows about rebalancing. We just don't tell you plain and simple that move your fund from A to B. We explain each and every action with each and every rationale. Even about ratings and rankings. I'm not sure if a lot of you are aware about this, but if you click on the inform or off track or the out of form pill on the app, you will see a detailed explanation as to why we are calling that fund as inform, why there have been certain metrics which have been called out in a certain way. Everything we do, and we believe in this thing that nothing should be black box for an investor, because if it is black box, then some things are not being told outrightly, and that is not what we believe in. And the last part, and the most important part, is that we build with our elite community, which means we take the feedbacks very, very seriously. Everything which you will, hear me talk about will or would have come from your feedback, the pain points you are facing, or, we analyze a lot of investment behavior, the way you're investing on our app. Maybe if we talk about 3 or 4 recent launches that we did, be it introduction of mutual fund buy sell on our platform, we saw that there was some loop which was not getting closed. We were giving you advisory, we were giving you research, but you always had to go to another app, think about it, and then make the decision. We are trying to close that loop by launching mutual fund buy and sell, with which you can transact on PowerUp Money platform in direct mutual funds. Next, we built tax summary. And it's a very interesting story that in January, while doing our research with our early elite members, we were talking to them, and that's when they said that we have a lot of second guessing when we are filing taxes regarding capital gains. Were we optimized? What could have been done better? And January was a very tough month because we were prioritizing power allocation. We were working on power allocation. Almost every designer, every product person was on that problem statement. But we realized because of time sensitivity, taxation needs to be picked up and needs to be prioritized and needs to be shipped in the right timeline. We picked up tax in Feb mid, and by March first week, by March 7th, 8th, it was there internally. We were testing it out, and next 4 days we released it to all our elite members. And I think by far, uh, after rebalancing, tax is one of those releases where we have received immense love from our elite members, because it has helped you save in real money. Thirdly, family. Uh, those of you who've been with us in this journey for more than 4, 5, or 6 months know that family was always spoken about in all of our webinars. Whether we are doing rebalancing webinar, we are doing masterclass, top 10 questions masterclass, or if you're interacting over email, every one of you came and said that I have spouse, I have my brother, I have my parents. I want to add their portfolio. I track their portfolio. That's what we launched. In January as a part of our family release. So we hear every feedback, we evaluate, we have a very strict evaluation process, because we are in the nascent stages of building. So we want to create products which have the highest net positive impact on our investor community. And that's what we do. So these are the three principles on which we work internally, that is trust, transparency, and always building along with our elite member community. With this context, let's jump into what is our plan for financial year 26-27. There are 10 key goals we are focusing on. These are 10 key goals. These are the directions that we are focusing on. There will be things over and beyond this, which definitely we will be incorporating. But this is a great direction we have internally as to if we want to prioritize, then how should we go about it. First is about ratings. Mridul spoke about it, Pratik spoke about it in depth. I'll just tell you why it is very important as a product manager, why ratings coverage is so important for our investment community. Because if you are an elite member and if you see that all your funds are not rated, so you always feel that I have not got the complete advice from PowerUp Money app. And we always stand that this is a one-stop solution for mutual fund advisory. We do not want to leave any blind spots. We want every fund in your portfolio to be understood by you. You should know if it is good, bad, if it is underperforming. You should have a rebalancing recommendation if it is not doing good. To do all that, we need them to be rated and ranked. And that is what I think Mridul and his team will be focusing on for the next 6 to 8 months. And we will be delivering on that promise. I'm just touching upon it again that there will be few funds that might not be rated on the platform. That is because we need data to rate them, to rank them. And if the data is not sufficient for that particular fund, we will not be able to rate them. And like Pratik said, we will enhance the experience by now calling them as new funds. So you know that NFOs, new funds, will not be rated on the platform. And then there is a category restriction that if it's a niche category, unfortunately, we will not be able to rate them. Apart from this, we will try to cover as maximum as possible in the least possible time. And yeah, I'll be very hopeful if Nidul does so in the next 6 months. Second is the family view. I spoke that now on the app, what you can do is you can add your family members and then you can track their portfolio individually. But as soon as we launched in the first 15-20 days, a lot of elite members wrote to us. They said that, this is a great thing what you are enabling us to do. But what we want more is that we want to see it in a unified way. Because that's how we know, okay, this is the level of exposure we have in mid cap. This is the holding exposure we have in HDFC or ICICI. This is the overall XIRR we are getting as a family view. And that is what we are working on. We will give you a unified view in which you can add your spouse, parents, children, whoever you want to add as a part of your tracking of your mutual funds in your family. And you will get a one view. So it will be one visibility for all your portfolios. And you will be, it will be very simple to add, remove people from that particular. We are building it, and I think it will take us about a month and a half, because it's a more nuanced feature from a backend perspective. The experience is quite seamless, but the backend needs to be worked upon in a much detailed manner. On this, I saw a lot of questions, and a lot of people have also mailed me that once you are building this, also give us advisory at a family level. I will answer that question. It's not that straightforward. It's tricky from both the way our app is built, the way the product is built, and as well as from advisory. We will have to enable few more things to get that sorted. So phase 1 is already live, wherein you can add your family members. Phase 2 is a unified view all the metrics that you see, XIRR, returns, holdings, allocation, everything will be at a family level. And the third phase, which will be enabling of advisory at a family level. We have not thought through about that. Maybe it will come as a separate product. We will need to think and discuss about that, but that will need more work. Third, coming to power allocation, and yes, every fifth question in the Q&A is about power allocation. Let me first just address for the people who have just become an elite member what power allocation is and what will it solve for. So a lot of you have this question that, am I invested in the right fund based on the returns it is offering to me? But majority have this question, am I invested in the right category? How much exposure should I have? Do I need to have debt in my portfolio? Should I have gold and silver? Is my global exposure right? What are the indices I should be invested in? All that will be answered as a part of power allocation. I also read someone's comment asking that I have 24, 25 funds in my portfolio. Is that the ideal number of funds I should have? That we call as a consolidation problem. And that is also what is going to get solved as a part of power allocation. And thirdly, investors are always confused that, okay, today I have made a portfolio in some shape and form. But based on the market trends, the way it is changing, based on some funds becoming better, worse, fund managers leaving, a lot of things are going out in the market. What should be my SIP strategy? Where should I allocate majority of my money? Which fund should I pick in those categories? All of that will be answered as a part of power allocation. So power allocation will be a layer above or over power rebalancing, which will give you a 360-degree view of your mutual fund portfolio. And now I'll address the elephant in the room. Um, that yes, we initially promised that power allocation will go live in December, January, and it was a very conscious decision to slow down the pace over there and also enhance the product as we build over a period of time. I'll tell you why. Because of three simple things. We realized that the product was not complete. Even in mid-Feb, when we were planning to launch a phase of it, because the accuracy of the allocation plan was being worked upon. We wanted to hit 98, 99, 100% accuracy for all our elite members. Second, we wanted to align them with real portfolios. Usually what happens is once you are building an app which delivers feedbacks in a do-it-yourself manner, usually the experience doesn't get translated once you are consuming it as a consumer, right? You also need to understand, feel, and understand the basic rationales behind why certain decisions are being recommended to you, why certain allocations are being recommended to you. It should not be theory, but it should be in practical. Then we also realized that preferences is going to be a core part of our allocation product, which means a user wants their portfolio to be modified in a certain way. How do we incorporate that, right? And lastly, the clarity in which the product has to be built, the finesse which should come in that product. All that has caused that delay. To be very honest, I feel that by May end, the product will be ready. But this product will require rigorous testing across cases, across portfolios, across portfolio sizes, different categories. Because the recommendation, once it goes out to our elite members, we do not want any margin of error there. So while it might be launched in May end, a lot of you might not get access to it. It will be rolled out, just in a testing manner inside our company, and then, in a smaller group. But by June, you should see it in your app positively. And that is the timeline we are, chasing backwards in the entire team. Fourth is buying and selling of direct mutual funds from PowerUp Money platform. Pratik spoke about it. The problem was, we were not enabling it inside our app. You could not do transactions, so you had to go to another app and do that. We were giving you rebalancing recommendations. We were telling you, for saving taxes, this is the fund you should sell. If you had invested from someplace else, you were not able to sell it from PowerUp Money app. If we were recommending you to buy a new fund, it was not enabled from our app. Everything is and will be enabled for our elite members. We have just opened it to 600, 700 beta members. If you want to try out this product, please do write us, do mail to me, Anvi, Prateek, or Mridul. We will enable it to you in about a day's time. Please note, uh, this product has some finer things which needs to be improved, and I'll also be very transparent about that. We work with an intermediary which enables to us to process these transactions at the respective AMCs where you're placing these orders. Now this is a new platform which is built, so there are slight hiccups. uh, Now these hiccups are in experiences but not in the end outcomes, which means your money is in safe hands. The NAV you get is absolutely correct. Uh, these are not the baseline problems, but more of an experience problems. What you expect from PowerUp Money as a platform. So it will be there in about a month or so. But if you want early access to direct mutual funds from PowerUp Money app, you can just mail us. Sumit, who already
Arush, sorry, just a quick time check since we're already at 12:20. If you could just expedite your coming points because we also have to move to the Q&A section.
sure, sure.
And to the audience, I just want to say that a lot of your questions Arush is already answering in these slides. So if you could please listen carefully, a lot of your questions will get addressed. Thank you.
Thank you, Anvi, for giving me that time check. Um, Sumit asked this question that I have been, whitelisted for mutual fund buy sell from PowerUp Money app, uh, but I'm not able to sell the funds which I bought on another platform. Sumit, we have already worked upon it. We have tested the flow internally, and now you will be able to sell your external direct funds from PowerUp Money app. For regular, we are still working on it, and once it is out there, we will announce that also. So today you can buy new funds and sell the funds you have invested through PowerUp Money app on our app. But soon you will also be able to sell external direct funds via our app. One more question is from Mr. Gaurav from Qatar. He was asking that, will NRIs be able to invest through this feature? Currently, Gaurav, it is slightly tricky because the KYC flows like DigiLockers are not seamlessly enabled for NRIs. There is a FATCA details. FATCA means personal details that have to be submitted to AMC. That has to be thrashed out in an NRI's manner. And there is some AMC level restriction also that certain AMCs do not allow NRI investments. We have to build for this. First, we will focus majority on domestic because that is where majority of our investors lie. Then for sure we will focus on NRI and we will solve for it. Next up is tax summary. I'll not take much of a time here. Tax summary was launched in March. Today, you will be able to see how much is your tax liability which you had to pay in the last previous financial year. We will be opening up this feature soon so that you can track your real-time tax liability. But the reason why we've written this here is because we will be enhancing this feature more and we will be going much deeper in solving taxation. The next thing we'll be picking up is advanced taxes so that you can track your real-time tax liability. Also know that if you need to pay any advanced tax, and in case people who are not paying advanced tax till now and losing money to penalties, you will be able to save that. Next, ETFs, and a lot of you have asked us even today. Mr. Sai Mukesh wrote to us that why don't you enable ratings and rankings of ETF? So we are working towards this also. Currently, the way we are integrated with our intermediary who helps us get mutual fund data for each and every investor does not pass on ETF data to us. So that was one restriction. Not that we were ready to rate and rank them, but still we did not start our work because we did not have the base data. But we figured out a product, a way to get it. We will need to integrate it. Maybe it will be with account aggregator infrastructure or something else we will need to do. But we will soon start rating ETFs. They will be added to your plans and you will know everything about your ETFs. Seventh is on enhancements and stability. I've spoken about enhancements and stability across whatever I've spoken in the last 10 to 15 minutes. The major point I'm trying to drive here is that we launched last year, and we were trying to build product feature by feature by feature, so that we can give a lot of benefits to our elite members. In that pace, there have been certain things that we were not able to optimize for, because of which our app was breaking sometimes, or there were stability issues. But we have solved majority of them in the last 2 months. I think only about 4 to 5% will be remaining, and that is what is being worked upon. In the next 2 to 3 months, we will make it 100%. Values, data updation will be faster. Small feature suggestions, like add 2 or 3 variables in Power Select. We will incorporate each and everything so that your experience is quite seamless on PowerUp Money. Infinite, I'll leave this part. Pratik covered this in detail. But if you want to be if you want to be added to Infinite waitlist, and if you want our team of wealth experts to work on your portfolio to make it make it optimal and best out there, please write to us, and we will add you to Infinite waitlist. 9, this power portfolio. A lot of you tell us that you don't want to do everything from scratch. You don't want to take all the effort कि मेरे पुराने funds में I have to take these actions. You want it in a simple manner, wherein just tell me how a good portfolio looks like. I will act upon it, and you manage it for me. That is what we call as power portfolio. In industry, they call it model portfolio. But we are going one step ahead from model portfolio. We will not be just telling you the 5, 7, 10 funds which should be there according to a high risk, medium risk, or a low risk portfolio. But our investment advisory team will be actively managing it. So from our app, in just a few clicks, you will be able to execute, and you will be able to exactly replicate and mimic the portfolio that we are managing. So this could be a great strategy. And personally, I am very excited to build this product, and how this will work, and this will make life much simpler for me. So I am an aggressive investor, and I know that I can pick up an aggressive portfolio from PowerUp and just act upon on what they are saying, right? I don't need to put my brains to it. It will be a very simple and a seamless experience to do that. Lastly, network tracking. This also majority of you have told, and the way you tell us is that we invest outside asset classes also, apart from mutual funds. We do stocks. We have money in PF. We have in NPS. ETFs. Why don't you enable them all on your platform? Because investments have to be managed across the place. Yes, we do acknowledge that. The problem is we were focusing a lot. That's no problem. The focus right now for us was mutual funds. We wanted to ship everything possible for a mutual fund investor. I believe in next 4 to 6 months we will be there. Post that, we will be picking up network tracking. First, we will get all your data inside our app in a single place, and then we will help you in giving various views, advisory over different aspects of your net worth. This is the plan for next year. I hope we are able to deliver it in time with the quality, precision that PowerUp always promises. Thank you so much.
Well, thank you so much, Arush. I hope I'm audible. Thank you so much, Arush, for taking us through, through the plan in detail, and also keeping an eye out on questions around these things, and answering so many of them. I just want to, share a closing note, which is around anything that we build at PowerUp, we prioritize is based on your feedback. Arush very nicely laid down our philosophy around how we pick up, how we build products, and one of the major role that all of you play is by sharing your feedback so that we can assess what is it that our users, that our members want. Every chat of yours, every Q&A of yours, every email of yours, every survey result of yours, from data we keep analyzing. That's how we build, and that's where we have set ourselves this goal that you see on this slide. As always, it is ambitious. We want to finish all these as soon as possible. And sometimes internally we wonder that if we had a time machine and we could fast forward 1 year with our app, already having all these products the way we imagine them to be. It takes a lot of effort to build these, but we are very excited and looking forward to the next year and building these products, and creating and adding many more tools so that you can make so that your long-term wealth creation can be made more impactful and more seamless. There are I think a couple of things that we have been hearing for some time, but we have still not managed to commit them. And this is where also comes that, we have to take a hard call on certain things. And one of the biggest asks that I have been hearing over the last at least few months, I think a couple of months, is a web portal. So we are app only, and mutual funds has so much data. You want to see Power Select in on your laptop, so that you can do much deeper analysis. I completely acknowledge, I completely understand that that is something that can make the experience for some users, really better than the app experience, especially when we are talking about numbers. It is still something that we have not yet managed to prioritize, and that's why you don't even find it on this list. That does not mean it cannot happen in the 1 year, but so far we have not yet taken a decision on that. We know some of you need it. The hard call that we have taken is to build more tools that add value than to solve for that right now. Um, uh, it's a feedback that we are aware of, but in the larger interest of all our members, in the larger interest of creating the tools that add value, we have prioritized that over we have prioritized these over web. The second thing that lesser number of you ask is, let's say, something like stock advisory. So on this slide, you can see that we are fully committed on ETFs, tracking of ETFs, ratings of ETFs, even buy sell of ETFs from our platform. We are committed of net worth tracking. So on the app, one day you will start seeing how much do you own in stocks, but we are not going to be doing stock advisory on your stocks. We will not be commenting on whether they are in form or whether out of form. We believe mutual funds are more than sufficient for long-term wealth creation, and the behavior on stocks, consumer behavior on stocks, more often than not, start getting towards, can I make quick money? The churn has to be more often. So that is not something that we are going to be doing in the next year. However, we do want to create a net worth tracking platform so that you can track all of this together. With that, I'm going to call it an end to our presentation. It took us much more time than we thought. 1.5 hours. Thank you so much to 750 of you who are still around. Thank you. And now I'm going to let Anvi take us through the Q&A section and other things that I may have missed while I was speaking all this while.
Thank you. Thank you so much, Prateek, Arush, and Mridul. And thank you so much for everyone for still sticking around and for listening to us, properly. Of course, a lot of your questions might have gotten answered already because Prateek and Arush were, of course, able to see the questions that you're asking. So they were trying to address them while they were presenting their slides. But because commonly asked questions and questions that have remained unanswered. I will just pick them up right now so that they can also be answered. Just one thing I would like to call out: a lot of you have also sent, like, questions very specific to your own portfolios, like, should I invest in this and this category, or like, what should I do with this fund? So those questions are a little difficult to take up in a larger forum like this, where of course hundreds of you are present. But we would still love to, of course, help you out in whatever query you might have. So you can write to any four of us, all four of us, and we will get back to you over email. But for this forum, we'll only keep questions that are more relevant for like a larger audience and a larger forum like this. Without taking any more of the time, I'll just jump to the Q&A section. So Prateek, I've actually divided the questions into like different things, like rebalancing and like ratings, questions on ratings, taxes, etc. But before any of that, a lot of people are also asking, like, how are you looking at the markets right now? Like, the markets are down right now. Should they be investing right now? Any particular way in which you would recommend that they should be investing? Any maybe few thoughts on that before I come to the specific questions?
No, actually, that's the most important question right now. And March was, one of the most volatile months for markets that I remember. Haven't seen more ups and downs. And if I'm not wrong, within March itself, Nifty 50 fell by almost 11%. Now, what does it mean for investors? Um, the right thing for investors at this point should be to use this an opportunity and invest. Um, the most difficult part when the markets are so volatile is to build that conviction and invest more. But in the past, there has never been a single instance when investing when the markets were down did not turn out to be rewarding for investors. So the right thing to do right now is to actually leverage this opportunity, especially at the current levels. Despite last week was actually, good. Market has bounced back, but we cannot say that the volatility is going to end. There is, a lot of ambiguity around how the war is going to, how the war is going to. The future of that, the negotiation discussions, right? So it's quite possible that next week the market will fall again. My suggestion is that at current levels, when the market is, from its peak about 10% down, valuations across a large cap, mid cap, small cap have corrected. India has now not been available, like Indian stock market has not been available at this price in the longest time, right? So it's definitely a good time. Find the right dip and invest. Now comes the question of how do you invest, right? If you're planning to invest, let's say, a few lakhs, 5 lakhs, 10 lakhs, 50 lakhs, depending on each and every appetite, how should you go about it? The best way to go about it is in your ideal allocation, right? Don't try to handpick some sectors. Don't try to handpick some funds, but see what your portfolio looks like and keep that composition intact and invest according to that. This is what, in fact, kept us a lot busy in March. For our Infinite members, I think for most of our Infinite customers, uh, we help them invest more money, place more money in the market in the right allocation, so that they can take the benefit of this timing, and their long-term returns could be more rewarding.
Thanks, Prateek. So there's also a question that will we also start tracking NPS too in the near future?
Yes. So it's a function of how do we get access to that data as we're going to be deciding, when we get there and, we start working on the network tracking, wherein, we would like to show your stocks, bank balances, etc. NPS is also one of those things. Thanks for calling it out. I missed adding that, on my deck, on my PPT, but NPS is also going to be a focus area.
Got it. Thanks, Prateek. So there's a question on the Power Select feature, which is that currently the Select feature shows comparison among funds in a particular category. Can we have a feature where we can compare funds across different categories based on the parameters already available?
Now this is where it is tricky. It's not like it's not possible, but the reason we have not done that is because it is a bit misleading. If you are comparing a small cap versus mid cap fund on those parameters, then it's not the right way. It's not the right thing to do. When it comes to mutual fund investing, the first question that you should answer is what should be your asset allocation, which category I should be investing in, and then you should understand that within this category, which fund I should be picking. Now, if you're going to be comparing, two funds which are in different categories, it's like comparing apples and oranges, and this will lead to misleading insights or takeaways for investors, and that's the reason why we have not done that. It does not sound right doing it because it will lead to or it can lead to misleading takeaways.
Thanks, Pratik. I'll just move on to some questions on ratings and rebalancing now. The first question is from Subhasis, which is if some challenges happen, like fund manager change, any ethical legal allegations, say front running, etc., do you take call on recommendations of putting it out of favor? These are the qualitative factors. So do we take those into account?
No, 100%. 100%, our ratings are going to be dependent on qualitative factors. And I can tell you that one of the most important goals for us going forward also is to build very deep relationships with all the AMCs. And in case such allegations are, such allegations come to surface, we will first go and check with the AMC and try and understand their perspective, and then take the right decision in the interest of our customers. That's what we have started doing, and that's what you will see us doing much more often. And like I was saying before, that on Motilal, we have taken multiple steps. It's not only that, one. It's not like that, we just took the call of changing the rating. We have done a lot of due diligence to understand what is going on, what should be the future prospects, and we'll continue to keep a very, very strong track on this, not only from quantitative side, but by speaking to the relevant teams and continuing to probe and understand more details so that we can get this right. And this is going to happen a lot more in future. There is a lot of investment that we are doing behind this, and over the next 3 to 6 months, you'll hear a lot more about this.
Thanks, Pratik. So of course, in the presentation, we shared our report card, right? Where we have shared that the calls that we got right and some of the calls that we didn't get right. So a question is that what steps are we taking to correct it going forward and increase the chances of us getting it right?
No, absolutely. The fact that we've created a report card. See, what is a report card? Report card actually tells you that you're good in maths and you're not good in English. Now, what does that mean? That if you're not good in English, you're going to work more hard to get better in that. So this report card is a good reflection for us, is a good reminder for us that what are we doing right, what are we not doing right, and by virtue of this, there is now more attention being given to places and areas wherein we were not right. Once we have this, then we know that what do we stand for, and we are continuously asking us this question now more, that how do we get this right, and what exactly went wrong. So that's the whole purpose of report card. So now we have a way to really measure what Mridul and team has been doing. Until now, we were going by the team judgment, but now we can really catch hold of Mridul to ask him why did this not happen right. But more importantly, how do we correct it? Because that's the value that we want to deliver for investors. That's the promise that we have made to investors.
I think Mridul is going to get a lot of emails and LinkedIn requests today. So moving on to the next question, Pratik. Of course, we rate funds in 4 different buckets on the app, right? Inform, on track, off track, and out of form. So in an off track fund, the app recommends to hold it, but wouldn't it be better to just invest in an inform fund because an off track fund is also not doing great?
It can, and this is exactly where rebalancing plan comes in. Uh, an off-track fund is not a buy, but is it a sell or not? Your rebalancing plan will tell you. And yes, most of your elite members, you've seen your rebalancing plans, and you would see that in your rebalancing plan and off-track fund, you would see, rebalancing recommendation for that. That's how we make sure that you are getting the right recommendation.
Thanks, Prateek. So there is one more question, which is that, people have started to understand that a lot of times fund performance is cyclical. So a fund that is like, informed today might not be informed tomorrow, etc. And we are recommending that, invest in informed funds. So would that mean a lot of churn in people's portfolios if they keep trying to invest in informed funds?
So this is exactly what the report card also captures, which is the third metric, which is informed stay time. Shows you for how long those funds have been rated as infirm on the platform. And just jogging the memory on that, it was about 2 years for the high risk small cap mid cap categories, for about 2.5 to 3 years for flexi cap category, because those ratings are still not matured, right? I mean, those funds are still infirm, and it was upwards of 3 years for large cap and hybrid categories, right? So this is what you should expect. The churn is going to be a function of the fund and the longevity of that fund's performance. Our aim is going to be to keep you invested in the top ranked funds. In fact, not even informed funds, but the top ranked funds, because that's where the real consistency lies. That's where the good alphas lie. And those funds, we also want to identify those funds where the longevity is very high, so that the churn is as low as possible. But I must also say that it's a myth that it's a myth that you should invest and forget. For long, that's something that has been making a lot of noise on social media, when people say you should just invest and forget. That's not the right way. If you want to make additional 3% on your portfolios, then invest and forget is not the right strategy. Now, 3% in silos may sound low. It's only 3%, right? But 3% makes a lot of difference. Over 20 years, the difference is quite significant, almost 2 times. And that's exactly what uh, uh, getting your investments right is all about. It's about that additional 3%. This is what the best of best fund managers will do. This is where good funds versus the not good funds, the difference is. And that's what, as an investment advisor, we also aim to help you achieve.
Thanks, Prateek. So while we have spoken already about Motilal Midcap, in this session, but there are just two questions that I'd like to bring to light again, because a lot of people are asking them. Number one is, we deranked the Motilal Midcap fund from a top-ranked fund to rank 17 in a matter of 1 month. So were we late to take that call? Could we have taken that call sooner? And secondly, if anyone is invested in Motilal Midcap today, should they exit the fund?
Yes. So to answer the first question, were we late to take that call? Um, in hindsight, yes. Could we have taken that call earlier? Did we have that conviction? No. But in hindsight, I would say yes, because the fact of the matter is that the fund performance dipped from October, and until now it continues to be like this. And we took this call in March, but we also didn't want to take a call that we had deranked it, or dropped the rating and ranking, and then the fund bounced back. If we would do that, then it would be the wrong thing for us. So we would take an additional month or two to build the right conviction, whether it is from data, whether it is from understanding the fund strategy, or whether it is understanding from the fund house, how things are. Um, So throughout January, February, and March, there was a lot of discussion that we had, and finally we took the call in March. So could we have taken it before? Yes, in hindsight, for sure. But we didn't know how to. Maybe in future we will know. We will be able to take this call sooner. But more importantly, also remember that it is important that we have taken that call, and the right recommendation has been made. In mutual funds, a month here and two will not matter, and this is where mutual funds are very different from stocks. Coming to the second question, if you are holding a Motilal a mutual fund, should you exit it or should you continue to hold it? I would say that lean on your power rebalancing plan. That is going to give you the right recommendation on that. I don't want to single-handedly comment on that fund without knowing your personalized rebalancing plan.
Thanks, Prateek. So there is one question about, it is phrased this way that in economics, like, nothing is free on investment products. While we are in RIA, we are using, like, direct mutual funds only. We're saying that we're not taking any commissions from mutual fund houses. So in that case, how are we making money?
No, we are making money by charging customers. So the whole difference between the model of making money via commissions and versus an RIA model is, in RIA model you are charging the customer. So the customers evaluate us. If they trust us, they pay us. Otherwise, they don't. There is no customer that we are serving who is paying us, but he doesn't know or she doesn't know that they are paying us. What this difference does is it brings more transparency and unbiasedness into the picture. Uh, our only interest is now to make you feel confident that we are doing a good job. If you are going to feel that, you are going to pay us. If you're not going to feel that, you may not pay us. You won't pay us, our business won't work. And that's why our interests are only, our incentive, everything is now directly aligned to what our members and our customers think about us. That's the difference. We will charge you the same money. Please remember, we can't offer our services for free. We will charge you the same amount of money because we have to run a business. It takes a lot of money to build a business, but we will do this transparently and in 100% unbiased manner.
Thanks, Prateek. So of course, like, in equity mutual funds, a lot of these funds are, active funds. And I think at PowerUp, we also believe that, you should invest in active funds because that is where you can generate, that alpha over the benchmark. But there is a question that, aren't index funds better because they have, like, lower expense ratio and NAV? So shouldn't we just invest in index funds?
So index funds are definitely better for, let's say, a large cap category. Having said that, I also showed you how in active large cap categories also you can make about 2%, 2 to 3% alpha. But let me now explain why are index funds not good for a mid cap or a small cap category. Not only do active mid cap and small cap funds deliver better alpha over index funds, but the biggest thing that they do is they protect your wealth. They protect the downside protection of your investments when the markets and when the tide turns. Because in a mid cap index, the investment your investment is actually put into mid cap stocks, which are 101st, 101 to 250th biggest, largest stock in the country. Or in a small cap, your investment is made from 251st to 500th stock. Those are the small cap stocks. So there is no downside protection versus in an active fund, almost 20-30% of your investment is actually kept in a large cap fund. And those large cap funds, A, will protect your downside. What's the other thing? Instead of investing in all the small cap funds, your investment is made in handpicked funds that not only deliver better alpha but also give you that protection. So you would see most active funds will have much higher downside protection over an index for a mid cap or a small cap category, and at the same time they deliver better alpha. So it becomes an obvious choice to invest in an active fund over an index fund for your mid cap and small cap, the high exposure, which is extremely important for your portfolio as well. In large caps, like I said, in large caps, though, index is a preferred choice for most customers. Having said that, if in a large cap active fund you can make 2%, it's a better decision, and that's what we aspire to do. The other important aspects is also hybrid. See, none of the index offers hybrid qualities, and hybrid qualities are multi-asset, right? How do you get exposure to commodities and equities together in a fund, or a balance advantage kind of category, which is a mix of debt and equities? They have much lower downside protection, and they give decent returns, like a couple of percentages down from Nifty 50, but they give that. So therefore, active funds are much better when it comes to planning how your portfolio should be.
Thanks, Prateek. So Prateek, there are two major concerns around the concept of rebalancing. So I'll just bring both of them up. I'm sorry, actually, before that, I'd just like to say that we'll just take a couple of more questions. I was just scanning through all the questions again, and I think we've covered a majority of the common ones. In case anything does get missed, I think we had more than I think more than 600 questions today. So of course, I might have missed a few. In case I have, then please write to us and we will definitely get back to you. But I've tried to cover most of the common ones. So we'll just, since we're also nearing 1 p.m. and I understand that while this session is great, but you might want to get to other things on a Saturday. So we'll just take up a couple of more questions and then we'll let you go. So Prateek, there are a couple of common fears around the concept of rebalancing. One is it will break the effect of compounding. And second is the tax implications. So these are the two reasons why people are hesitating to rebalance. Can you please address them?
Yeah. So to address the first question, rebalancing is not breaking your compounding because what you are supposed to do in rebalancing is exit an underperforming fund and enter into a top performing fund, right? So compounding breaks if you are exiting, but you are not redeploying that money quickly in the market. Compounding is just about discipline. Compounding just means that your money is lying in the right asset class continuously. So one should not think that selling a fund is breaking of compounding. It is a myth, right? It's a math. It's simple math. No one can argue that selling a fund and reinvesting it is breaking of compounding. Now coming to the second part, which is taxes, and this is where it becomes. See, taxes becomes one of the biggest reasons for the delay of decision making. I spoke about there are psychological reasons why we don't act on time, because we are wondering performance may change, markets may change. Should I just wait? I'm just procrastinating it, or I'll do it tomorrow, then I forget. The second biggest reason for delay of taking an action is to avoid paying taxes today. Remember that you have to still pay taxes on that tomorrow or one other day. All that you're doing is you're avoiding to pay that taxes today. So by doing that, you think, okay, this money is not going out of my pocket, but the cost of doing that, what you're losing, the opportunity cost that you're losing is you're probably losing 3% of your return. So if it's a 10 lakh portfolio, a 3% of that is what you're losing any which ways every year. So you're losing 30%, 30,000 in this case on an average. Now you may be saving some tax, which you still have to pay one day, whether it is today, whether it is 2 years later that you decide to sell that fund, or 5 years later, or 10 years later, one day you will still have to pay tax. You are not saving that money. You are just saying ठीक है मैं आज आपको ये पैसे नहीं देना चाहता, कल दे दूंगा. तो आप उस पैसे को बस डिले कर रहे हो, आप बचा नहीं रहे. But what you're losing out here is the opportunity cost of making better returns. And this is one of the reasons why people don't act on it. And this is where professional advisors would not worry about it at all. Your fund manager does not think about taxes. The fund manager would think about performance of the stock and which stock will give you better performance over the long term. They don't delay selling a stock in their portfolio because of taxes. And this is where professional advisors will always recommend you to not to optimize for long-term capital gains tax. And our recommendations will always optimize for avoiding you to pay a short-term capital gains tax or exit load on your fund. Anvi, are on mute.
Sorry, thank you. We'll just take last two questions and then we'll wrap up. So the first question I want to take is on regular to direct funds, Prateek. We spoke about that a little bit earlier. Is it necessary to exit a regular fund and then make a fresh investment in direct funds? And if yes, isn't the tax that you have to pay a big problem in doing that?
I'll first take the tax question. The answer is same. You are avoiding paying tax today, but one day you have to pay it. Okay. The cost of that is staying in a regular fund. A 10 lakh rupees investment in a regular fund is costing you 10,000 rupees per year, any which ways. And this 10,000 rupees is also compounding every year. Just remember that. Okay. Now, the other thing is there a way for you to move from regular to direct seamlessly? Unfortunately, there is no way today that is available in the market. These are decisions taken by AMC, SEBI, right? Whatever infrastructure and possibilities are available in the market is what we can offer. Now, for a regular to direct switch, technically it is possible. It should be a click of a button and your regular fund should become direct. But for some reason, this capability is not offered by AMCs, by AMFI, by SEBI, by all the regulators essentially, and the AMCs who decide this. If that is going to be made available tomorrow, we'll probably be the first one to make it available for our investors. Today, it is not available, which means you will have to sell your regular funds. In fact, in foreseeable future, if you're holding a regular fund, we will not be able to allow you to be able to sell your regular fund from our app itself. Maybe we are exploring some ways in which maybe we can move your regular fund from via an STP route to first into a direct debt fund and then help you do that. There are certain things that we are exploring, whatever best is possible, but otherwise it is going to be difficult for us to even offer a sell of regular fund from our platform because today it is not available in the market.
Thanks, Prateek. So the last question for the day I will take is, do we have any view on international investing? And in our power allocation plans and in PowerUp Infinite, will we also help users invest in markets outside of India?
100%. And this is where global funds come in. And that's why in March, we have also released our ratings for global funds. We wanted to do that before power allocation goes live because global investments is going to be part of power allocation, like your asset allocation strategy. We are going to give this as a preference for the customers. Whoever wants to invest in global, their power allocation will comprise of global exposure as well. Unfortunately, though, most of the mutual funds are not taking in fresh investments in their global funds. So we will also have to see as that opens. This is where ETFs also come important. In global funds, by the way, our recommendation is to play safe rather than being more aggressive, to focus on countries that have demonstrated performance over many years rather than some very different markets that have given stellar returns over the last 1 year. But if you look at their 10-year performance, they would hardly be about 4 to 5% average returns, right? So no, we don't recommend the risky countries that don't have proven track record, but investments in markets that have proven track record. Uh, uh, it is definitely important. It is definitely that is going to be part of our allocation via mutual funds and subsequently via ETFs.
Thank you, Prateek. And that's a wrap on our Q&A session also. Before I say any more, I'm going to quickly launch a poll while I still have, a little over 500 of you here. Please let us know if this annual investors call, did you find it useful? Did you appreciate the fact that, whatever we shared, did you think that all of it is useful to you? Would really help us understand, what you thought about it.
No, absolutely. Thank you so much to so many of you. I think 1,200, 1,300 of you for joining today, and 500 plus of you to be still around at 1 p.m. We didn't think it would go on for 2 hours, but what a lovely day it has been for us. I mean, we thoroughly enjoyed doing this. While you go, please give us your feedback
Yeah.
on the
So
poll.
95% of you have said that you did find it useful. Thank you so much for that. You have no idea what it means for us. We have been preparing for this call the entire week, and I mean, in a way, the entire year, but more on this presentation the entire week. And for those who did not find it so useful, we would absolutely love to hear your feedback. I have already dropped our email IDs in the comments. You can please write to us, and we will definitely take note of your feedback. It will only help us improve. If you have good feedback, we would love to hear that as well, because it helps us understand what we are doing right. So yes, thank you so much for that. I'll just conclude the call now. So thank you so much, Prateek, Mridul, and Arush for taking this up. And I think for sharing transparently, whatever we did right, whatever we missed in this entire year. And to our investors for placing so much trust in us. We couldn't have been reached where we are today without your trust, without your input, without your feedback. We literally have customers who write to us as soon as a feature goes live, sharing their views about what you've done well, what you can do better, etc., etc. And that is the reason that I think that we have such a strong product today. And we feel even more energized to do right by you and you only and no one else. So thank you so much. Keep placing your trust in us, keep supporting us, keep sharing your feedback. And that is what will take us, very, very far ahead. And it will help us do, right by you again and again and again and again. And we'll be able to bring, high quality, unbiased mutual fund advisory to all of you. So thank you so much.
Thank you so much, everyone.
Thank you so much, everyone.
Okay, have a wonderful weekend, everyone. See you. Bye.